right, how we doing, guys? Sam here with you. It's what are we? Thursday, the 21st of February here. Now we're going to take a look as we rotate back and forth. I'm going to take a look. This is one I've chosen. This is the pound to the yen. Now there's a very specific reason that I was here looking today, and that's tied to this action over here on the right. Now, so you look at this, and go, well, why the hell am I going back through the last? Oh shit, what do I got here? 9 years. Well, a couple of reasons. Now, first, before we get too far into this, I've got to do this. My marketing guys will give me hell. We've got this contest that we've just launched here. So I just reminder here, this link will be directly underneath the video here. I promise I will not bombard you with this on every video for the next 3 weeks. But just while we're first launching it here, this link will be underneath. If you're interested in participating in this giveaway where we're giving away monthly memberships here at Trade Devils University. So first prize 2 months, second prize 1 month, third prize 2 weeks. So that's coming. But I want to make the point here that you do have to click that link and then register. So you got to give it an email address, and we could contact you if you want. And then your Twitter handle, because it'll be tied to the number of likes, shares, and retweets. Now, again, as I mentioned this last couple of days, we don't want you retweeting just to get another entry into the contest. The hope is that you're retweeting because you find the content valuable and you'd want to share it with your network. So hopefully that's the case, but I make the point of mentioning that simply in that that's how you increase your odds of winning. So with every tweet, like, share, you'll get another entry. Now this one, of course, this shows 0 here because this would be as though I were entering. So it would show me the number of entries that I have, but obviously I'm not in it. So I just a reminder here, if you're interested in that, the link will be directly underneath. Okay, so let's get back over here and we'll get back to this discussion here. So the reason that we're looking here, that will be in one of the videos that we're going to release over the next couple of days here, so that will make more sense to you. But if I'm looking over here because of something I'm seeing in the short term, I'm using that as a bit of a segue to get you back to be sure, particularly in FX, you must check the daily. So one, you're going to find it much easier to spot the trends. I mean, this is, boy, hard to miss this one. So I've got a clear 5 coming down here. Now we do end up with a double bottom. Technically, it's not truncated. We do get a new low here, but we don't get the full extension in the 5th that you might anticipate. But nonetheless, I've got it in terms of now, as we can look at it, with hindsight, we can see a clear 5, and then we can see a clear. Now this gets a little gnarly here. On the assumption that we've got this correctly identified as a 5 coming down, well, we're looking for the retracement. Right? What's the ideal zone? Between the 50 and the 618 is right where we go. So if you're looking at this as corrective action, and there's an alternate here that we can consider here, but right now as it sits, so I can certainly get a clear impulse into this level. I get a little 3-wave here. Now, yeah, I know that symmetry is horrible, right? So the length of the A relative to the C is a bit ridiculous. So there is an alternate here that you'd have to keep in mind, and that this looks just like one straight big trend in this little ABC here. That could be the 4 into the 5. But the subdivision here is such that if you're thinking of it as a corrective wave, boy, it's going to be tough to get anything else out of that. Because you can get you have to go, this has to be your 5. So this is the only way you could count it. Well, so there's a couple of things that I wanted to reference here. Now, this slightly, for Forex trading, we changed some of these slightly here, and we use a different suite of indicators here. Not that you couldn't use the things that we've already shown you. We just tweak it a little bit for FX trading. So the thing I'm trying to get to here, people are hesitant to use moving average style trading. They're thinking, it's too simple. There's more to it. It can't be that simple. Well, look, this is well, it's variation. It's essentially the Vegas wave. But right, is this difficult to follow? Impulse, retrace, right to the moving averages. It's not too tough to just stay short here. Here's the bottom. We get on the other side of it. I mean, we get a little break here. Nothing's going to be perfect, but boy, does that not keep you on the long side? Then we go up. We're coming down the right. How hard to? Right here's simple. I can't get any more simple. That's the whole. These kind of moves are the whole reason that you want to be in foreign exchange, because of these trending. Shit, what is that? That's from 11 through, that's a 4-year move. 4 years. And we get 2 years coming down. At no point, if you just took the short here, right, boom, retrace into a 2, at no point were you ever tempted to do anything other than let that run. Now, hard to do. I'm not saying I caught that for 2 years straight down. I'm just demonstrating to you that simple is often the way you want to go. So particularly, now you don't know when you're up here that you're going to get a 2-year trend straight down, but you certainly have a reason to be looking at the short, if for no other reason than we had 5 down. We know we want to look between the 50 and the 618. And so maybe you missed, maybe you got stopped out. You know, these are worth. Look at that. So let's say you took it here. You got stopped out. Again, you stopped out. So you might get stopped out 2, 3, 4 times. The mistake would be not taking it the next time. I know. It's easy to do in hindsight. I understand, right? I trade this stuff every day. I understand how difficult that is if you've been stopped out 3 times to go, okay, this is the one. Because you don't know. Now, this is it was probably technical, right? You can anticipate that. We can just look at it. So there's the 50. Now, you don't know how far that's going to go. But if you were just using the moving averages as a guide here, until we get here, there's absolutely no reason to do anything other than stay short. Right? You don't. Again, I know you don't know, because you'd be drawing that up on the daily, thinking, well, okay, this looks impulsive. I don't know if that's an ABC. I know I got into the proper range here. Well, here's a little reaction at the 50. We go into the golden zone when, it doesn't hold. So I understand you're not going to know. You never know, guys. There is no knowing. There's only probability and money management. That's it. You want to boil trading down to its essence? You're not going to know. And since you don't know, you better be disciplined with your money management, because again, you can be wrong. Well, it's very commonly used in trading is the baseball analogy, right? You step up to the plate, you strike out 7 out of 10 times, but you get a hit 3 times, you're going to the Hall of Fame. Same thing in trading. 7 stops. I don't care if you took 7 stops there. That compensates you way beyond whatever you lost on the stops. Again, I know you don't know what's coming, right? But once you're in, the challenge is staying in. All right, so let's get down to the analysis. So if that's 5 down and we've had this sort of corrective action, it sure looks like, I can get an A, a B, and then it's kind of a funky little diagonal in there, but I can sure get an A, B, C. Well, I've had 5 down. So of course we're going to use the dominant. We're going to look here and say, all right, well, is this a front run? We've got this little cluster here. Is there something else there? Well, we've got this. Right? Always look left. I bumped into it previously. Well, here we bump into it again. Now remember, we never, you don't know what they used until you put the pieces together. You're looking for their footprint. So you look here and you go, well, definitely there's an algorithm that was pulling from dominant to dominant, but I'm going to check them all. So I'm going to come down to the 2 and go, could they have used that? Well, when you see that, so why would they use that? Well, remember this was a 50. All right, so this was a technical pivot. So for whatever reason, there's an algorithm using that. I'm sure there's one there as well. Maybe that one didn't get filled. But this one, it's to the tick, guys. Right? So we can lean into that as for shit, again, who knows, right? For whatever reason, they use that. So that when it's that precise, I know that's software doing that. And oh, by the way, it's to the tick here on that prior pivot. So where would that put the target? Again, as I will remind you, just because it's there doesn't mean it's inevitable that we go there. But it sure does look like that's a solid pivot here. So I've got a technical pivot off of this. Here, I can get an ABC. I know there's a little funky diagonals in there. Well, now coming down from that, it looks like the same thing. So it looks like I can go 1, 2. I got an ABC into a 3. So if I'm going to zoom in on this, how are we doing over here? Now, anything that's got the yen in it, we did have that spike down. So things have gotten a little funky with the yen because of that spike. So you have to make some judgment calls. Is this what I'm going to use? Well, if I go 1, 2, here's a clear impulse. So I can go an A into a B here, and then we come down for the C. So I've got the shape of a diagonal. Now remember, a diagonal, we want to pull from the start of the 1 through the pivot of the 3rd, looking for the 4. That's the trade in a diagonal. Well, here it is. We'll get a little bit through. Well, let me take this off. Okay, so we get a little bit through the 50, but we get right into that sweet spot between the 50 and the 618, just as we did on the last one, 50 to the 618. That's right where we're looking for it. To and through target. So the spike takes you through the target. So now you got to look at that and think, all right, what is it? All right, if this was the ABC correcting the 5 down, the 2 years that took to bring this down, and we've gone ABC. 1, 2, right? I mean, it's hard not to think that. Now there is an alternate here, and that we could have more complexity. So we could go ABC and do a WX potentially now, because I could probably rework this for an X. So we'd be looking for something larger that might look like this. So you might have something like this. So putting that in context, would that make sense? All right, so now let's go look at the dominant. Remember, we know there's going to be software up there using that. So let's dial that in. So now you look here and you think, could that make sense? Could this just be? We'd have to rework the count here. I understand that. So we could essentially do it as an A into a B into a C. Well, of course, just looking at that, we don't know what the timeline is. So what can we use to help identify something that would be a leading indicator? So I'm just going to grab that up. So are we going here? Are we going here? If that's going to be in play, all right, we could hit it right here. Remember, it's 80% probability from this pivot. So as long as that pivot holds, we've got 80% probability of hitting the median line at some point. Now we could hit it here, and that 80% is realized. We could hit it here, and we'd have a perfectly technical pivot. That's what that's what you dream about. You catch one of those, that's a must take, just as this would be. Must take, absolutely must take, and then try and use something like a moving average to keep you into the trade. So if this were going to be if this is our A, and then we're going to go A, B, C, then you can look down here, and so you'd have multiple targets. So again, this could be years in the making. So you'd have this target, and then the bigger one down here. That would make more sense. Now put that all back together. Where are we going? We'd be going to new lows. So let me see. Gosh, I can't do it. I'd have to go to 3-day. Hang on, let's try 3-day. So we'd be breaking that low. So you look at that and you say, all right, is that possible? Is it reasonable? Well, obviously, this is a function of interest rates between these two countries, and we have the wild card of Brexit going on in the background. So could that make sense? Sure, why not? Now, the other thing here, I show you this just to remind you guys, you got to use these. Okay, so you might look here and say, okay, well, given that I have this structure here, just as I'm trying to suggest there could be a play here. So if we look at this as a pivot, so let me do it this way. So whenever I see this, so I've got this, although I come to a double bottom here, I've got that. Okay, so I've got that structure. Let me tighten this just. Get both of those because we've got a double bottom here. So it becomes which one do you use? All right, I'm going to use this one because I think that's the start of the one. Okay, so if this is in play here, so I've got this potentially this structure here where I've got 3 pivots. Well, so you first look at that and you might think, I doubt there's any market geometry there to help me, so I'm not even going to bother looking. There's a reason there's a pitchfork in the middle of my logo. If I had to only pick one technical tool, it's the only thing I could use. I could trade very, very comfortably, very successfully with just median lines. I mean, that is, I promise you, that's not random. Right? They use these, right? So to the tick. So why would you not think that this is going to repeat over here? Not that it must, but I sure as hell would want the pitchforks on there. Wouldn't you? That's kind of my point here. So it's somewhere, if you're even thinking about trading in forex, you have got to you got to have these long-term counts on. Look how much easier it is to see. You lose the noise. You go down to a 15-minute or 30-minute, even a 60-minute in FX, you're all over the place. It's so hypersensitive to the last report relative to, is there a potential interest rate change? That's what drives this, right? Money goes where it's treated best. Right, so when we have this disparity, when we have this kind of trend, we've got interest rate disparity between those two countries. All right, so here, this is just unreal how technical that is. Boom, 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 same thing. I'm certainly going to look for that here. So let's go back. Let's see. Let me go to a 4 hour. So where's the next trade? Well, there's a couple of things happening in here. Let me since I've made my point there, let me get rid of some of this stuff. Okay, so here, this is a bit of a conundrum. You've got this with everything tied to the yen. So you've got this spike pivot, you've got this monster wick, and then you have the next wick up. Well, what I'm noticing is that it's the next, well, let me mark it so you can see it. So it's this little pivot right here. So if you're not going to use the extreme here, and you're just going to use the next pivot, well, then it starts to take a little more shape, and it starts to make a little bit more sense. So maybe, well, let's just check this. Let's just check the first thing you do is, are we technical? So here's the first one. Front run on the 50. Well, right to target. Actually, first target, reaction. Second target, reaction. Back to second target. So we know that an algorithm used this. So for whatever reason, so if I come down here, we look at it and you think, well, what'd they use? What'd they use? What'd they use? Right? You can look here and say, well, something happened there, but look what that's relative to. So you start pulling up, say, did they use that? Well, I'm starting here because this is the deepest retracement I've got. I get a slight front run here, and I go boom, boom, both targets hit. Well, now I'm going to keep using this pivot because I know I've got a good pivot here. So I'm going to use this, okay? Because that was the technical pivot. Well, pardon me. This is the technical pivot right here. Let me pull it over here. Right, so essentially we had a double bottom. So this was the technical pivot that got to two targets. So what happens next? Right to the 50. So are they going to get there? Well, nothing says they must, but there was certainly a reason to be looking at, right? So when I released the series of videos, this is one we're going to feature because there's a specific reason to be looking here on the 19th of February as to why you're looking to get long. So you want to be conservative? Well, you wait for it to get on the other side of the moving averages. Now there's no pressure on you. We just had a little rotation, chance to add, up we go. Double bottom at the 50. So my guess is this is going to be the technical pivot. So, well, here, let me take this off here so you can see it. Let's get rid of this. Okay, remember this pattern. This is very common. This kind of price action here. If this one goes too far, if you break, right, so if you're trading this and you're looking for the 6-1, or it's for the golden zone to hold. You get a little reaction, but they break it. They go up to the 786. It's that alternating pivot that the algorithms like. Okay, so this one, we're between the 50 and the 618, but we're denied here. So you can look at it and you go, well, why? Why am I denied there? Why do I not get target? Well, as I just showed you, right? It's always a battle between algorithms. These guys win the day. They don't. This guy does not get to his target here at the 618. Been reasonable to think that they might, and that would have been a nice looking trade to catch that confluence between a target and a golden zone, but they don't. It's too strong, or for whatever reason, report comes out. Something's driving the market here, which again, there's a reason why we were looking here. Now you look at this and you think, okay, well, there's the 50, but we're not to the target. Okay, so what's the next play? Well, if they're not to the target, we don't want to take that off. That's still where this software that bought it, has defended twice, is trying to get it to. They're going to stay long until they get there. Well, so from here, wouldn't you just take the next 50? Right? That's an opportunity to get on board this trend. We can see what they did here, so we'd have the potential to take this. Well, you'd have a range here. So you can trade this one, or maybe you take a partial here, look perhaps to get the whole thing from the larger degree. very tradable. So we've got structure here. So you can do it this way. Say, okay, I got a few wicks here. I've got this little structure here. This little platform here of prior resistance now becomes the support. If this comes down to the 50, I am absolutely all over that. Why not? That's a nice risk reward. Remember, I'm on a 4-hour here, so that's more dough than you think. So if you're taking a long here on that front run, first target, stop under the 65. You get yourself 3.5 to 1. Get the second target. Maybe take a partial there. Well, there's 4.2 to 1. You take it all the way. You get 4.3 to 1. Nothing wrong with it. So do you want to go down to the hourly? Well, then you can kind of fine tune here. So this is what you'll see this a lot in FX, where you'll have rotation. It's the idea of trend, pause, rotation. Now we're going sideways. So if this is going to come back down here, I want to be alerted to it. So I would certainly we could just put an alert on the pivot here. So we come down there, maybe your first entry is here, and you start splitting your fills. So first entry here, in case it doesn't make the 50 and they hold it there. Second entry here, maybe you just ease in, right? So you can ladder in, or maybe you're looking for something a little bit deeper. So or you'd have a secondary swing here that you could look for confluence. Okay, is there confluence here? Well, it's not ideal. Not really, so I wouldn't use it. If I don't find it right on top of each other, I would just stick with this. Here's the dominant, there's the dominant. Now I'm down to a 1 hour. I would be looking to enter here. So I've got a fairly tight little channel here that has just broken. We're just starting to break down as we've gone. So this looks like potentially you could make a case here that you could just do a 1, 2, 3, 4, maybe 5 going up for the 5. So that's, as an Elliott count, that's certainly reasonable. Now 4 could be lower, 5 could be in. Double top doesn't look like it. Looks like that should have another kick. So is that the 4, or have we just gone A, B, C? Doesn't look like it. So it looks like this could have a little bit more to go. Now again, there's a reason why we're anticipating this to come down. So with what I'm going to teach you in these videos here, the reason that we were looking to be long on the 19th, now that's reverting. So as that corrects itself, you might look for a deeper retracement here. So thus the reason that we're in here looking. Right, again, so I'll go through that in more detail in the videos that we release as to why we be looking here and why we're anticipating that there's a move down here to come back to this support to test it and then potentially set up that trade that gives you that 4 to 1. All right, so that probably give you enough to chew on here. So again, those videos will be coming out to you, and fastest way to get them is to enter that giveaway, and then we're just going to mail them to you. All right, or email them, I should say. Who mails anything? All right, guys, that's probably enough for now, and I'll be back to you tomorrow. Okay, see you later.